In this video, we're going to talk about social finance, more commonly known under its symbol SOFI or SOFI. Before today's video begins, if you like my content, please also check out my other stock analysis videos on my channel, where I also analyze about other popular companies. SOFI is a startup operating in the sector of fintech. It was able to benefit from the stock craze back in 2020 and has since then had a relatively successful launch. Of course, just like any other stock, it suffered somewhat during the slump earlier this year, but generally speaking, it has been having enough ups and downs for traders to make money when it seesawed from one side to the other. Recently, the stock increased from a general region of about $15 to a peak of $24 to $25 in June, before pulling back significantly from there. There are two possible explanations regarding why SOFI is so volatile. The first one is regarding the speculations on the revenue projections. Whenever some analysts believe that revenues may go higher or lower than anticipation, they will publish this in an article, and then the stock will sometimes go up or down. That's just the way it goes, really. That is completely normal for a stock, and it also happens with other securities as well. But the thing with SOFI is that in terms of its equity structure, it's owned for the most part by retail traders, people like you and me, instead of institutional traders. Now, of course, don't get me wrong, there's nothing inherently wrong in small guys owning shares, right? It's just that when institutions own below 4% of a company, it does make you wonder, how come they're not more willing to put money forward on the table to own a piece of this company if it's so great? So with that on the side, we're gonna come back on this in a bit. For now, let's take a look at the nature of the stock. Note that I said the nature of the stock, not the nature of the company. They're related, but it's not always the same thing. The stock is considered and traded as a short-term security to make quick money from volatilities. It may deserve better than that, but for now, the current market dynamic pushes the stock towards that direction. In the long term, I think that there will be more skepticism from the market that people claim publicly at the moment. Obviously, when the stock is making money for a lot of people, no one wants to talk it down. But ultimately, the stock is in the fintech field, a sector that is not as regulated as the financial sector and is playing it at its advantage. It's a bit like Uber playing around the taxi regulation so that they don't have to pay for the permits, or the cryptocurrencies trying to avoid being taxed. I think that in the short and even medium term, SOFI may be able to operate with relatively little legal and fiscal burdens because of its lightweight and cloud-based structure. But over the long term, the regulations may begin to catch up to it and modify its outlooks. Another aspect to consider is that, unlike electric vehicles, fintech never really benefited from a frenzy around the sector. Individual stocks like SOFI have managed to seize the momentum of a gravy train meant for other sectors. But it doesn't mean that as a standalone sector, fintech necessarily attracts investors that much. Of course, only the future will tell for the long term, but the short-term time frame does give us very interesting opportunities to trade the stock, especially given its price action. SOFI is currently standing around $15, which is right at the bottom of its support region between $15 and $16. That region has been tested 7 times over the past 6 months, and to allow for a rebound from that point onward. The current price point is the result of a missed profit target recently, and as a result, the stock went lower. It's nothing surprising, and frankly, it's kind of interesting to see how the stock is able to maintain itself at that level, which really makes me believe that it's maybe as low as the market is willing to let it go for now. My recommendation is to buy between 1 to 3% of your portfolio in SOFI shares. And of course, always keep in mind that investing in a startup does have its risks, so only put in money you're comfortable losing. Thank you for watching. If you like my content, please also like, comment, and subscribe to my channel. Don't forget to check my channel for other stock analysis videos.